Today I wanted to talk about something very important, and that is tips and tricks on how to stop or getting yourself get caught bag holding stocks. Bag holding simply means when you refuse to sell the stock even if it goes against us, and hoping and praying that it would come back up so we can sell in profit or break even. And sometimes it does, but sometimes it doesn't. And when it doesn't, you end up bag holding the stock, and that trade wipes out all your profits that you made in the last week or sometimes even months. When I started trading my first 2 years, this was one of my biggest problems. I would have a great run and I would just work really hard, but that one bad trade would just wipe out all my profits and give me so much stress. And then not just that, but because of that stress, I would make even more mistakes in the shape of buying more shares that I could not afford in hopes to make back all my losses, forcing trades that were not good setup. And funny enough, that would cause even more losses and more stress. And it was just a slippery slope. And I know almost all of us go through this, and most people just give up. And it shouldn't be that way. And that's why I'm making this video. And because I feel it's very important and not many people talk about this. And if you're going through this, then you must listen. So in this video, first I will show a trade that I took this week that failed, but I was able to get out right before it crashed and was able to prevent myself bag holding and have a massive loss. Then I will talk about the thought process which saved me from bag holding and not getting caught in that crash. It's exactly what you need to do for every single trade so it doesn't happen to you again. Look at a BA trade where I alerted to buy at around trend break at 227 right here, and stop loss if it breaks below the trend. And guess what? It broke below, and right the next day I got stopped out at 219. And I alerted this whole trade in my string trading Discord channel, which is by the way link below. And I did exactly what I said before entering into a trade. Now look what happened after. Here's the chart and a bloodbath. I enter right here and I got stopped out when it broke below this trend line. And look what happened. I was able to navigate away from this huge bloodbath, just completely crashing with no signs of a bounce. And if I was a newbie, I would be holding this right still to this day and crying at night and then waking up early to pray to God for a bounce so I could get out, and only to see it go down even further more. And now I pray to God to just keep me sane so I never make this mistake ever again. So let's talk about how I was able to meticulously get out of this trade before the crash and my thought process on it, and so that you can do the same thing. So the number one rule that you must have is that you must have a strategy that is proven and tested, and that gives you at least 1 to 2 risk to reward. So in my case, in here, this trade, I had a trend strategy, which was a trend break. As soon as broke out of this trend, I knew there was a trend break going on. So my goal was, if it breaks the trend, it should continue up. And that was my strategy, a trend break strategy. So I had a proven, tested and proven strategy, although it did not work in this case, but this has been a proven strategy. So that's number one. The number two is that you must know the exact amount of money you're emotionally okay to lose, because that is how you're able to calculate how many shares should you buy for that trade and not get emotional. So in this example, I had bought 100 shares and I knew my stop loss was around $220. I bought here at 227, got stopped out at 220, so I knew I would lose roughly around $700. And I was okay with that because I knew if I win, I would at least double that amount and not more. And I knew also if I lose 700, personally, emotionally, at this time of my career, I'm okay to lose that amount of money. Now, for some people, it could be, let's say, $350, for example. So if there was $350, then you should only buy 50 shares and not 100. So you see how important it is to understand what is your stop loss so you can calculate your number of shares. That brings me to a third point, which is a stop loss. You must know your stop loss before getting into a trade. And that's the only way to know how many shares you should buy. So for example, if I was risking 700, so I knew I could buy 100 shares. If let's say you don't want to risk more than 350, then you should buy 50 shares and not 100. This is the key, because if I had bought, let's say, 200 shares or even more instead of 700, I would be down almost 1500 when it broke below the trend and when my time came to cut my loss. So if I had more shares, then because of that, I may not have cut my losses because I was not emotionally prepared to lose that kind of money. And imagine if I had not cut my losses, I would be down right now about over $7,000 right now, because the stock has just collapsed another 35 points and now just constantly falling. So to summarize, you need to have three things. Have a strategy. So in this case, I had a trend line strategy, right? I had a trend break strategy. Then have a risk amount that you already know how much you're okay to lose. So in this example, my risk was 700. So I bought 100 shares because my stop loss was around $7 per share. And final is to know the stop loss area, so you can calculate your position size of that trade and not buy more by mistake. That way, if it goes against you, you're not caught like a deer in headlights and freeze completely and let the loss turn into a huge and potentially ruin your entire weeks or sometimes entire month. But instead, be able to cut your loss and accept that you were wrong and then move on to the next trade. And that's it, ladies and gentlemen. I hope you learned something here. Make sure to subscribe and I'll see you guys in the next video. Take care. Bye.